All right, ladies and gentlemen, it is time for a Sofi stock update here on this sunny Saturday afternoon. It's quite hot outside actually, but Sofi stock was actually quite hot on Friday as well, up 19.26%. So I think it's very appropriate we talk about what is coming next, especially after this massive gap up that we've seen. 19% is something we have not seen on Sofi stock for a very long time, and we are actually coming up here and getting close to approaching our resistance level at the 50-day moving average. So let's talk about, is this market bounce sustainable? What potentially could happen with Sofi stock? Go over all of the data you need to know and the news for this upcoming week. So if you guys find value out of this video, hit the like button and subscribe to the channel. I know a lot of you guys watching this video are not subscribed to the channel. Only about 75% of you guys that watch these videos every day are actually subscribed. So go ahead and do that. Thank you guys that went ahead and did that. And if you guys want to get some free stock, down below in the description, anywhere from 1 to 5 free shares. Check out Webull, Moomoo, and Public. It's not a bad time to get yourself those free stocks at a really big discount right now. You've seen a lot of deflation in the stock market. Your same dollar goes a lot further buying stocks right now. So actually, inflation does not hurt you if you're buying stocks. It actually helps you apparently in 2022, making stock prices go down dramatically. But let's dive into this information. So like I said, Sofi stock was up 19.26% here on Friday, up $1.09, the largest move that we have seen in quite a while. We ended the day at $6.75 per share, down 2 cents an after hours, so call it $6.73 per share. Our 50-day moving average is at $7.95 per share, and that was our resistance level, like to a T, right here, and you could call it in here as well. We've seen a lot of resistance around about $10 per share, and 50-day moving average at the time was at about $10.60 per share, back here in, call it early April, end of May, and we're about $1 off of that right now. It's obviously came down as the price of the stock came down, so that's going to be the main level of resistance. If we can break out above that, it's going to be very good. But obviously Sofi stock is not immune to how the markets trade, and when the Nasdaq is up 3.82% like it was on Friday, and the Russell 2000 was up 3%, well, stocks like Sofi are going to take massive leaps to the upside. Now, is this rally actually sustainable, or potentially could we actually come down next week? Well, the thing about this market is I need to see a statistic on this, but I think this is one of the longest streaks of bad news that we have had in a very long time. We have not had any good news in, think about it, in months, at least 3 months. Bad inflation, bad Fed, mixed earnings. So it's not like you could say earnings were great. It was a mixed bag. Russia, Ukraine, you got the damn bird flu, you got COVID in China, you have China-Taiwan issues. You got a lot of bullshit. Just call it what it is. Bullshit happening in the world, in the markets, and there's not a reason to actually buy the dip. Nothing has fundamentally gotten better really throughout all of 2022. Everything has just gotten worse. So the markets, they want to bounce, but there's nothing to give it that bounce. Fed Jerome Powell actually coming out on Thursday and showing a bit of competency, saying essentially he cannot control if we have a soft landing or not. Basically, that we're likely to see a recession, actually triggered this bounce that we've seen on Friday, because it's kind of like when the markets are disagreeing with the Fed so much, and you got this big disconnect, it's not a good thing. One of them is wrong. Usually the Fed tends to be wrong rather than the markets. And it's kind of like, I've used this analogy before, but if you got this girlfriend, right? And the girlfriend's obviously, the Fed. If you're the markets, and she's just cheating on you, you know something's wrong. You guys are disagreeing. Markets disagreeing with the Fed, which is your girlfriend. Well, your girlfriend, the Fed, finally comes out and says, yeah, you were right. I've been doing what I've been doing. Well, you're going to be a little bit relieved off of that. That's what happened to the markets on Friday. That's the simplest way to put it. The markets were a little bit relieved because we kind of got some level of truth out of the Fed. So it really helps the Fed's credibility levels, but it's not like great news. What the Fed said was not good. Basically saying prepare for a recession, right? It's not good. But in the grand scope of things, with the Nasdaq down 30% intraday on Friday, we've already priced in a lot of bad news. We're kind of just waiting for the Fed to come out and say that. Now, you could see the fear and greed index is still at 12. Extreme fear in every indicator besides the VIX. Now, I've talked about this a couple times, but the VIX, the volatility index, is seen as the fear gauge. And a lot of people were saying we needed to flush out or flush up, whatever you want to call it, to about 40 or higher on the VIX to actually find a real market bottom. But what a lot of people don't realize is that the VIX just measures the puts and calls on the S&P. So when there's more puts on the S&P 500, the VIX goes up. Well, if a lot of people are holding extra cash right now, why would you buy insurance? Options, they're not supposed to be a degenerate gambling instrument. They're supposed to be insurance. That's why option premium is called premium, just like any other insurance dollar amount is called premium. You would not buy insurance on a car you didn't have. You wouldn't buy home insurance, right? You wouldn't buy stock insurance unless you owned a lot of stock. And a lot of people have since sold out of stock and they are holding onto a lot of cash. So it's no surprise to me that we've seen this short-term bottom, or at least what looks like a short-term bottom, and the VIX never really broke out to new highs. Hopefully that made a little bit of sense to you guys. Long story short, you don't have as many people buying insurance on their stock portfolios because they don't own as many stocks right now. They're a lot more weighted in cash, and I think that's going to play a big role to when potentially the markets do see a fundamental catalyst and you do see a fundamental piece of good news. Just give us anything at this point. Then I think you're going to see a lot of cash actually go back to work, and especially a lot of these stocks like Sofi that have gotten absolutely decimated into the ground. Now, I could be wrong on my VIX theory, but I think that makes the most logical sense right now. Let me know what you guys think about that down below in the comment section of this video. But nonetheless, looking ahead for this week, what do we have in store? Well, we really don't have all too much. We do have retail sales. I believe that comes on Tuesday at 7:30 in the morning. That's really going to be the only bit of news that could actually move the markets. I do think we have a Fed speaker or two, but that's going to be later in the week, and we'll go over that at a later time. But you also do have a lot of mortgage data that is coming out, like pending home sales, new builds, existing home sales, and I don't really expect that to weigh on the markets all too much. And you also do have initial jobless claims for the week of May 14th, but doesn't tend to move the markets around all too much. We'll see. Obviously the markets can change on a day-by-day basis in this market environment, but overall I don't think we're really going to get anything that's like good or bad news. So I think anything coming from the Fed will be the most important thing. Retail sales also will be very important. If that comes in good, potentially could be a good thing for the markets, but it wouldn't surprise me to see good retail sales and the markets sell off on that. And just expect a lot of volatility here for a very long amount of time until we get the Fed that U-turns or we see inflation actually coming down in a meaningful way. You're probably not going to see a bounce actually hold up. It's going to be a lot of back and forth. But I will say, SoFi stock reported earnings, and their earnings were absolutely incredible. There was a bit of disconnect between the guidance that Anthony Noto actually gave from Wall Street's estimates. He came out and said that Wall Street kind of has it wrong, that they're kind of disregarding what he had said in early April about revising down their end of the year forecast. So you kind of seen an adverse reaction off of that. But then once the markets realized, hey, we shouldn't have expected anything more than what SoFi actually gave us, then you have seen a 5% or 4.5% green day on May 11th, following by a 3% positive day, and then a almost 20% positive day here on Friday. So that is that. Let's go ahead and take a look at the Ortex data, and we're looking at 21.27% short interest of free float, 154.85 million shares that are sold short. Cost to borrow max numbers are going insane, 19.83%, cost to borrow average of 10.58%, utilization of 100%, and days cover sitting at 4.18. The option activity for Friday, sitting at a positive order value of about 57%, 13 orders totaling $2.48 million. So long story short, I really don't think a bounce will be sustained until we get some level of positive news, but the markets could go back and forth for quite a long amount of time. So just be prepared for a lot of this back and forth volatility, but I think SoFi stock did actually hit its bottom sub $5 per share after that report came out. We pretty much instantly bounced up from that, and there's a lot of risk taken off the table with SoFi stock. After a stock reports earnings, you're not going to get earnings for another 3 months. So lots of risk actually gets taken off the table after earnings. And I feel very confident buying SoFi stock at these levels for the next 5 to 10 years. This is a long-term trade. If we get a short squeeze here and there, if we get anything more than that, fine. But this is really a long-term buy and hold kind of stock. When the stock gets back above $10, $15, then I'll look to sell covered calls. But until then, I think selling puts is probably the best thing to do with just a little bit of extra money. You could sell a $5 put, $500 in collateral, probably collect $50 for doing that. And I honestly don't think SoFi is going to stay under $5 if it goes under $5 for an extended period of time. So that is going to be all for this video. Hopefully that provided you guys some context to what is happening, kind of what I expect, and why I'm so bullish on SoFi stock here for the short-term and long-term future. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Until the next time, you guys take care.